Hi guys, Boris Dorfman, LBC Capital Income Fund. As we're looking for balance in this market, I want to talk to you about interest rates. Why are interest rates so high? Why some of the banks offer lower interest rates? And what are the components? How do the banks come up with these interest rates? Before we do that, I want to talk to you about inflation, CPI, and PCE readings. CPI, Consumer Price Index, that's what most of you studies and most of you know, fell to 6.5% for the month of December. The reading came out about a week ago. Next reading is February 14th. It came down to 6.5, and the graph kind of looks like this. It peaked in June of 2022, then it's coming down rapidly. So between June and December's reading, fell from 9.1 to 6.5%. And like I predicted before, it's going to be under 6 before we know it. Also, the second reading, that's PCE's personal consumption expenditure. That's what Fed is actually looking at. It dropped more significantly, better than expected. I forgot what it was, but I think it's under 5% now, and that's what Fed is looking at when moderating inflation. And one number that did not, we feel that it should come down a lot in the next few months, is rental expenditure. Rent is 30 to 40% of the CPI and PCE. We see rents are not going up as much as before, and last CPI reading we did not really see this affect CPI. It will in the next few months. Watch this, guys. We'll see CPI drop more significantly. CPI drops, inflation moderates, and then Fed is not going to raise rates anymore. And at some point, maybe towards the end of the year, they may start lowering their interest rates. So interest rates, how do we calculate, how do the banks calculate interest rates? Obviously, there's market rate, what the banks are paying for the money. You have to look at the 10-year treasuries. You have to look at the mortgage-backed securities. I think 10-year treasuries peaked at around 4.5% last year, and they're around 3.5%. The mortgage rates peaked at around 7%. Give or take, and they're only dropped to just under 6. So why are they not dropping further? Obviously, there's risk factors, and there's also there's such a thing as runoff. When banks are giving money, they hope they'll get interest payments for the next 30 years. Years ago, I looked up that statistics. An average mortgage is getting paid off in 7 years. Doesn't mean that people actually paying it off, but means people sell the property or they refinance the mortgage. So banks are looking at that statistics, and they're saying, okay, so we give a loan, there's cost associated with that loan. We have to pay originators, we have to give rebate to the brokers, we have operational costs. Then the bank sells it to another institution, and then that institution has to pay for servicing. So there's a lot of components. Bottom line, when the loan is held for a long period of time, the bank is making money on that loan for a long period of time. The shorter the bank keeps the loan, the less money they make. And if they keep the loan for a year or two, they're not only not making a lot of money, but they're also losing money. So today, in an environment with high interest rates, the banks are increasing their rates artificially so they can get more spread, more income in the short term, because they know the rates are going to fall. They know eventually when rates fall, people will refinance. So whoever got the loan at 7% a year ago probably refinanced into 5.75 or something around this time. If they're holding off, maybe 6 months from now, the bank is going to lose that loan. At that point, the bank paid for servicing, they paid originators, obviously overhead, salaries. So the bank is not making money when their loans are paid off. That's why, on top of interest rates being higher, market rates as a general, mortgage rates are higher where they should be because banks, lenders are pricing in that risk of getting paid off. If you guys are not subscribed yet, please check it out down below. Click the sign in sign, ask me questions if you have any topics you want me to talk about, and get back to the gym and look for that balance in your life. Thank you.